Good morning, family. Welcome back to the channel. It's your boy E, coming back with another video. I just wanted to make a quick video on. I was just watching the news, and there was the Senate hearing on Social Security. So I was like, you know what? Let me watch this. So I watched that about 30 minutes or so, and I'm like, you know what? I had enough of this. So part of the reason I started investing was not to be depending on Social Security, other people, or working a regular job, to be dependent on myself. And in the end, before I left off, the commissioner made a point about Warren Buffett. It's like the poor people, they work hard. When I say poor people, I mean people that work as cleaners and stuff like that. That don't make a lot of money. Now there are some people that have their own cleaning business that make a lot of money, but the people that work in those businesses does not make a lot compared to the owners. And I was like, you know what? I need to look at this and see what's going on. And the fact of the matter is, sorry, y'all, somebody at the door. The fact of the matter is, people that work in the business does not make a lot of money. The people who own the businesses, they're the one who make the money, right? In most cases. So if you're depending on Social Security, like I call it sometimes Social Security, you're gonna have a lot of problems because at some point there might not be no Social Security, even though Social Security is not part of the deficit that the government has, right? So that so many trillions of dollars that the government is in as regards to debt, Social Security is not part of that because we put money into Social Security. That money is invested into something else, and then people pay. That money is paid out. So as far as now, what we put in is probably paying the people now, the older people now. Then when we get to retirement age at 59 and a half, which I'll be taking my money at 59 and a half, or the soon as I can take it, I think I'm going to move it to 62, or I don't know exactly what it is. But whenever I can take that money, I'll be taking that money. That'll probably be my Lambo money at that time. I want to drive a Lambo. But, I'm making a joke at this point, but I hope you guys understand what I'm trying to say. You have to invest in your future, right? So before I go too much into that, thanks guys for subscribing to the channel. As you guys know, your boy E, I make videos about investment, real estate, stock market, making money. Okay, guys? So I'm just a YouTuber. I'm a guy on YouTube that make videos about my experiences, on this channel. So do your own due diligence. If you decide you want to use what I'm doing, my portfolio, remember, do your own due diligence, okay? Don't say, well, Edwin, he's making money, so I'm going to follow what Edwin do. Now, chances I lose money, you're going to lose money. You can't blame me, okay, guys? So I'm here to help the best way I can, but do your own due diligence. All right, guys, so let's get to the portfolio. So this morning, I was like, as you can see, everything is red. All the portfolio I have is red. It's another red day, but I haven't bought anything yet, right? So we're down overall on the main portfolio almost $3,000, 2%. All right, so this is big. So yesterday, right, when we did all that gains, I beat the S&P 500, Dow Jones. I beat those guys yesterday, right, by almost 0.5%, right, more than 0.5%. But now today we're down 2%, right? So on this portfolio, 2.5%, right, with the one at the end, right? That's not that serious. On this other portfolio, I'm down 1.5%, 1.30%. Okay, so overall we're still down, $5,000. It's okay, but like I said, I haven't bought anything today. The only thing that I've been bought is stuff that's on drip. When the dividend come in, I buy those positions. Okay, that's the only thing that I've been bought today. So we go over here. Now the overall market is down, right? The Dow is down, S&P is down, Nasdaq is down, gold is down. The only thing is up is oil and the VIX, right? Those are the only two things that are up here today, and everything else is down. So when we go to this chart here, right, as you can see, I think I showed you guys this the last time. You guys, you see this? This is when they say a red day. You got 1 here, 2, 3, 4, 5, 6, 7, 8 down here, right? all of the market is red. Everything is red. This is ridiculous, right? Oracle and the is green. Everything else is red. So I want to make this quick video to just give you guys an example. This is what I'm talking about, the buy on red days. Now, I might buy at the end of the day. I haven't bought anything yet. Like I said, it's still early. This is going to go on for the next month or two. And I don't want to use up all my margins because I need my margins. And somebody sent information, an email yesterday. I think it was an email about margins. I can't remember the gentleman's name, and I don't want to put you on blast, so I'm just going to leave it like that. But he sent an email and asked some information about margins. Now, you know, I gave him the best information I could, try to explain to him the best way I could. But if you're going to use margins, right, I'm going to try to make it as simple as I can as I do everything else. If you invest in margins, and let's say your margins, the taxes or interest on your margins account is 10%, right? And you buy something that pays you 3%. What's the use of getting margins? Because now you're short, what, 7%. So 7% got to come from either out of your pocket or out of the positions that you have, right? So don't use margins and you're paying this huge margin interest, right, for the money you're borrowing, but what you're getting in return is less than your margin interest. Okay, guys? So this is how I'd look at it, right? If now some of the stuff, if it's 10% and my margin is 10%, I would do it because it covers the margins, right? And for a certain period of time to see how it works. Now, after a certain period of time, if I feel that I'm not getting it's not going to work out, then I would change to something that pay a higher return to use margins. It's just that simple. And when you have margins on your account and you don't have cash, if you buy anything that is under the interest return for your margin, similar to that, you're gonna be using your margin. So in return, you're losing money, right? So you gotta think about it this way. This is how I think about it. Now it might be more technical, complex explanation of that, but this is how I look at it. Okay, guys. So remember to invest in your future. This is a quick video I'm trying to make this morning. It's about 10:21 a.m. right now. So invest in your future. Subscribe to the channel and share the content. We're going to be bringing the video at the end of the day after the market close. All right, guys. Thanks for watching. I love you guys. Sign up to the Discord. We got a few more people sign up to the Discord, and they're already posting in there. So make sure you get in the Discord and post what you feel comfortable posting in the Discord, and we'll have a conversation there. Okay, guys. I'll talk to you soon. Bye.